Let's just get right into it. By the end of 2025, I believe we will see Bitcoin smash through the $250,000 price point. Now, I know that sounds absolutely insane to some of you. $250,000 for a single digital coin might seem like something out of a science fiction movie. But hear me out. The financial landscape is shifting beneath our feet at an unprecedented rate. Institutional money is preparing to dive in headfirst. Macroeconomic factors. Increasing scarcity. A tidal wave of new retail investors are creating the perfect storm for an explosive upward trajectory. That will make previous bull runs look like minor tremors. This isn't just wishful thinking. It's a calculated forecast based on observable trends. Think about the last few years. Bitcoin hit all-time highs many thought were impossible. Then it pulled back in corrections, with naysayers declaring its demise. Yet here we are, September 1st, 2025, and the conversation has changed. It's no longer about survival but how high it can realistically go. Infrastructure is being built. That foundation allows massive capital inflows. We are witnessing the maturation of a new asset class, and those positioned correctly stand to see generational wealth. Before we get into the heavy financial analysis, let me share a fascinating little piece of Bitcoin trivia that really puts its journey into perspective. Did you know that the first ever real-world transaction using Bitcoin was for 2 pizzas? That's right. Back in 2010, a programmer named Laszlo Hanyecz paid 10,000 Bitcoin for 2 Papa John's pizzas. At the time, those 10,000 coins were worth about $41. Today, at a price of, let's say, $150,000 per coin, those 2 pizzas would be worth an astonishing $1.5 billion. It's a legendary story in the crypto community that perfectly illustrates the concept of opportunity cost and the mind-boggling growth of this asset from a niche programmer's hobby to a global financial powerhouse. It's a humbling reminder of how far we've come. This story isn't just a fun fact, it highlights a core principle of investing: the power of early adoption and long-term vision. While no one could have predicted such astronomical gains, the event marked a pivotal moment. It proved that Bitcoin could function as a medium of exchange, moving from a purely theoretical concept to a practical tool for commerce, however small. Let's talk about what's been happening with the price of Bitcoin recently. It has been on an absolute tear. As of today, September 1st, 2025, Bitcoin is hovering around the $150,000 mark. This represents a significant rally from the consolidation earlier in the year, where it traded sideways in the $90,000 to $110,000 range for what felt like an eternity. This recent breakout is not random. It's being driven by a few key factors. First and foremost is continued institutional demand. Major investment banks, pension funds, corporations, they are systematically allocating a small percentage of their portfolios to Bitcoin. This is capital inflow, more money entering the market than leaving it, creating buying pressure and pushing the price up. Another crucial element is the aftermath of the most recent Bitcoin halving. The halving is a pre-programmed event about every 4 years where mining rewards are cut in half. That reduces the rate of new Bitcoin creation, increasing scarcity. We had a halving in 2024, and historically the next 12 to 18 months are often explosive. We're in that post-halving bull market now. It's not just me making bold predictions about Bitcoin's future. Some of the biggest and most respected names on Wall Street are now coming out with price targets that would have been unthinkable just a few years ago. For instance, analysts at major investment banks like Goldman Sachs and JP Morgan, who were once staunch critics, are now publishing research reports with long-term price targets ranging from $200,000 to $350,000 per Bitcoin. They often justify these figures by comparing Bitcoin's market capitalization to that of gold. The total market cap of gold is estimated to be around $15 trillion. If Bitcoin were to capture even half of that market as a digital store of value, its price would have to increase several times over from its current level. Another prominent prediction comes from Cathie Wood of ARK Invest, who has been a longtime Bitcoin bull. Her firm has put forth models suggesting a price of over $1 million per Bitcoin by 2030. Their thesis is based on Bitcoin capturing a slice of many different markets simultaneously. They believe it will take a percentage of the global store of value market from gold, act as a settlement network for large financial transactions, serve as an insurance policy against government seizure of assets, and become a standard part of corporate treasury reserves. When you start adding up the potential value from all these different use cases, you arrive at these seemingly astronomical numbers. It's a comprehensive view that sees Bitcoin not just as one thing, but as a foundational layer for a new digital economy. Of course, not every expert is so optimistic. There are still plenty of skeptics who believe Bitcoin is a speculative bubble with no intrinsic value. Ultimately, the growing chorus of bullish predictions from mainstream finance is a powerful signal. For years, the biggest question mark hanging over Bitcoin has been regulation. Governments around the world have been trying to figure out how to handle this new technology. Their approaches have been all over the map. However, in 2025, we are finally seeing a move towards regulatory clarity in major economic hubs, particularly in the United States and Europe. This is a huge deal. The lack of clear rules was a major barrier preventing large conservative institutions from entering the space. They couldn't invest their clients' money without knowing the legal framework. Now, with bodies like the SEC providing clearer guidelines on custody trading classification of digital assets, the floodgates are beginning to open. In the United States, the most significant development has been the full-fledged approval and widespread adoption of spot Bitcoin ETFs. An ETF is an investment product that trades on a traditional stock exchange like the NYSE or NASDAQ, but its value is derived from an underlying asset, in this case, Bitcoin. This allows anyone with a regular brokerage account to get exposure to Bitcoin without the hassle of setting up a crypto wallet or dealing with digital exchanges. It's a game changer for accessibility. The success of these ETFs has been staggering, attracting hundreds of billions of dollars in investment and proving that there is massive untapped retail demand, institutional demand for a regulated Bitcoin product. Beyond the price charts and Wall Street predictions, Bitcoin is quietly but steadily weaving itself into the fabric of the real world. Adoption by major corporations and payment processors is accelerating. We've moved far beyond niche online merchants. Today, Visa and MasterCard have integrated crypto solutions, letting vast merchant networks accept digital currency. Tech giants and consumer brands are experimenting with Bitcoin for loyalty programs, international treasury management. They see efficiency for cross-border transactions. A powerful example is the growth of the Lightning Network. It's a Layer 2 solution. Think of it as an express lane on top of the Bitcoin blockchain. The main Bitcoin network is incredibly secure but can be slow and expensive for tiny purchases like coffee. Lightning enables near-instant, nearly free transactions, practical micropayments. It's being added to social media apps, gaming platforms, remittance services, so people can send tiny amounts across the globe instantly. It helps solve scalability and unlocks new use cases. Bitcoin is also a tool for financial inclusion in developing countries. Many people are unbanked but do have smartphones and internet access. Bitcoin lets them save, send, receive money without a bank. So let's pull all of this together, summarize the key takeaways practical for you as an investor. First, Bitcoin's price is on a strong upward trend, currently around $150,000. This rally is not just hype, it's supported by strong fundamentals. Massive capital inflows from institutional investors treating Bitcoin as an asset class, a programmed reduction in new supply due to the 2024 halving, a broader economic environment where people seek protection from inflation. Second, predictions from major financial institutions are becoming increasingly bullish. Some credible targets reach into the hundreds of thousands of dollars. My personal prediction is $250,000 by the end of this year. Third, the regulatory landscape is maturing, shifting from fear to a growth catalyst. The approval of spot Bitcoin ETFs in the United States was a watershed moment. It now makes it incredibly easy to invest through a standard brokerage account. Clearer legal frameworks in Europe and parts of Asia are removing barriers. Regulation is paving the superhighway for mainstream adoption. Finally, real-world adoption is accelerating. Technologies like the Lightning Network are making everyday payments viable. When considering Bitcoin for your portfolio, think of it in two parts. In conclusion, the state of Bitcoin in September 2025 is incredibly strong. We have a powerful combination of surging institutional demand, a tightening supply, a clarifying regulatory environment expanding real-world use cases. While my prediction of a $250,000 Bitcoin by the end of the year is bold, it is rooted in these observable, fundamental trends. The journey from a programmer's pizza payment to a multi-trillion-dollar global asset has been nothing short of extraordinary, but all signs indicate that the next chapter of this story could be even more dramatic. The key is to look past the short-term volatility and focus on the long-term structural shifts that are cementing Bitcoin's place in the global economy. As an investor, the noise can be deafening. You will see headlines predicting a crash to zero, right next to headlines predicting a surge to $1 million. Your job is to filter that noise and focus on the foundational principles we've discussed today. The increasing scarcity, the decentralization, the institutional validation, and the growing network effect are the signals that matter. Whether Bitcoin becomes the primary global store of value, or a foundational settlement layer for a new internet of value, its role in the future of finance seems increasingly assured. The question is no longer if you should pay attention to Bitcoin, but how you should position yourself for the changes it is bringing. The most important step you can take is to continue educating yourself. The world of digital assets is constantly evolving, and knowledge is your greatest asset. It's what will give you the confidence to buy when others are panic selling, and to take profits when others are getting greedy.